Do we have any sense of what's actually going on, and does it matter for Activision at least right now?
So no is the short answer. Obviously, as you indicated, it's kind of unusual to have a filing like that just as the new year was upon us. The employee in question, Spencer Newman, he's been with Activision Blizzard as the CFO for about a year and a half. He's under contract. If you believe the reporting, it's Netflix looking to hire someone under contract, which is something they've done before. I think some people are trying to read the tea leaves. Netflix has been looking for a new CFO. David Wells has been the CFO for about 14 years. So it would make sense, especially given Newman's past with Disney and entertainment. The perception that we have, though, is that people might be thinking, hey, this is a negative for the interactive home entertainment area, right, and the company in particular, Activision.
And are you suggesting it isn't necessarily a negative for the business itself, or?
No, I mean, I think people might just think, hey, this is a better opportunity to work for Netflix and Activision Blizzard, which I think a lot of people would probably agree with. But I think if you look at the area, the video game software area, I mean, these companies have gotten crushed. Absolutely. If you look, in 2018, I think you're looking at a 24% decline for the S&P 1500 sub-industry. And over the last 3 months, these stocks were down almost 40%, Activision Blizzard included.
Was it too much of a sell-off? Is there more value there than that or not?
So, Becky, we actually have a hold opinion on Activision Blizzard, but we do actually like Electronic Arts. We have a strong buy on, and we have a buy opinion on Take-Two Interactive. And we made those upgrades, not at the bottom, obviously, because that would mean that we upgraded on Monday. But we did upgrade late in the year as we saw more and more value presenting itself.
So is this because macro is slowing down and the multiples came down, or is this a supply-demand issue, kind of that you see down in the...
Yeah, so I think it's a little both. I mean, I think we saw a lot of multiple compression just because of concerns related to the market. In addition, though, I think these companies are very hit-driven, and so when you see delays or you see disappointments, these companies get hit. Activision Blizzard is kind of special because what we've seen is they acquired King Digital a few years ago, and literally every single quarter we've seen monthly active users from that particular business unit going down. That has been a concern for that particular company. But Take-Two Interactive, they released Red Dead Redemption 2, I think in October. The opening weekend sales for that particular product was $725 million. So that was literally one of the biggest releases in media history, really.
You say they're hit-driven. Is there still a perception that they're at risk for not being where the gamer eyeball hours are? In other words, you had the Fortnite phenomenon and these things that can kind of just take the whole kind of gaming world by storm and not necessarily be their proprietary IP.
Yeah, and it's interesting because if you look at Take-Two Interactive, for example, Grand Theft Auto is the title that's most associated with them. It accounted for 40% of their most recent fiscal year sales. And that's a game that was released well over a decade ago. If you release these top franchises, you can continue to monetize with updates and virtual economy goods and things like that, internet services. And if you don't, it really sets you back considerably.
And what's an Electronic Arts? I mean, what's behind the buy rating there? Is it just a valuation?
Yeah, so it's really two things. It's the valuation has gotten very, very appealing to us, but also we think they have a great lineup of new games for 2019 that people really aren't factoring into what we think will be resumed growth and better profitability. If you look at these companies, it's more digital, more mobile, and the good thing about that is higher margins for those businesses going forward.